Today is the 12th of April and I'm taking a look at the US dollar, Japanese yen on a monthly time frame using Serene Education's Forex Made Easy strategy. Here we can see that price is making lower swings and we are therefore in a pullback against a long-term upward trend. Looking here, we can see price is currently trading into that monthly 50-day moving average, and we have got the 200-day moving average below price thereafter. The current monthly candle is trading very much lower than the previous month's close. RSI is below 50. Our MACD histogram is still just above the midline. However, our fast and trigger lines are now below, indicating that the sentiment is to the downside. Dropping now down onto a weekly, we're starting to see the current weekly candle trading lower than that 200-day moving average, engulfing the previous week's candle, which was a spinning top to the upside of that 200-day. RSI is below 50. Our MACD histogram is below the midline. We've had a MACD moving average crossover as we started to see this pullback against that upward movement that was prior to that. However, those fast and trigger lines still remain above, and we'll be looking for continuations to the downside once that FOS line crosses over. Looking here, we've got the 50-day moving average, which is below price, which would act as our first target, followed by our second. Now dropping down onto a daily, what we've got here is the current daily candle finding a support on the 200-day moving average, and is starting to trade higher than yesterday's close. RSI is below 50. Our MACD histogram is now just below the midline, and our FOS and trigger lines are below as well. So the indicators are giving us potential opportunities into selling positions. However, with price not trading lower than that 200-day moving average and not lower than that long-term support and resistance, daily traders will have to wait this one out for a daily confirmation close lower than the 200-day moving average. In all honesty, that's what I would be looking for. However, if you wanted to drop down and look at intraday opportunities here, we can see price bouncing off that 200-day moving average on the daily and engulfing that previous 4-hourly close. RSI is below 50. Our MACD histogram and FOS and trigger lines are below the midline, and price is trading below these two moving averages. So what you're going to be doing is looking for an intraday close lower than 109.37 to then target those next support levels, which are around about 100 pips away. So you keep this one on your watch list. Personally, I'd be waiting for a daily close lower than that 200-day moving average as real confirmation of a break of that trend.